Very good morning, everyone. Welcome to Admiral Markets. We're going to take a look at Forex trading, of course, in the charts, the Forex market. But first of all, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk. It may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Good. So today we're going to have actually a focus on Oscillator, maybe, as you might know. But in general, the Oscillator, of course, is a supporting tool. Sometimes I do use it for more specific trading methods, specifically the Oscillator. As you might know, that is one of my, or the favorite, in fact, of mine. So that would be a bit more in the foreground today. But in general, it's always good, of course, to use these 5 steps in your trading plan to define the trend, define what you see as an opportunity, for example, pullback or the price action pattern. Check for any filters, of course, that might block the trade, like big resistance supports or divergence. Establish what you would consider as trigger, and then decide the entry. The trigger and the entry can be the same, but don't have to be. And I use, of course, fibs, trend lines, and moving averages most of all for all of that, and the Oscillator, as we will today look at. Alrighty. Let's take a look at the calendar first of all. Yesterday we had FOMC, but that was really not much of a volatility as far as I've seen when I woke up this morning. I wasn't watching it last night when the news announcement was released, but the reaction seemed to be very mild, in fact. I'm not sure if anyone knows why. I was trying to find some news, but couldn't find much information about it. It was only a part of the article mentioned something about the Fed and the news announcement. But in any case, tomorrow is still NFP, by the way, at unemployment rate. So that's maybe why there was not much movement. But we also have, by the way, today, euro and pound stuff, of course, big ones, in fact. We have the interest rates and speeches and probably some news releases as well, I guess, or some statement releases. In any case, Draghi speaking at 1:30. Well, with that said, we got some lighter euro news throughout this morning, primarily 2 hours from now. And the Aussie had retail sales, and those positive look just like Germany yesterday had one of the most positive retail sales figures, in fact, since the last few years. So what does that, how does that influence our market? Let's take a look. I don't know if anyone took a trade yesterday. I was looking at the euro dollar yesterday and saw a bit of maybe downside continuation, so that's what I did. It looked like a break of this trend line and a hook back to the trend line. So to me, that was an interesting resistance spot, as you can see here. Let me open my drawing tool 1 second. So the hook back to the broken trend line, also the hook back to the moving averages at the same time, right? So that seemed like a pretty decent opportunity to me, plus the fact that we were at the 78.6. Now, I didn't take it right at the trend line or right at the fib or even right at the trend line. But what I did was I waited for a few candles here, 5 candles, because then the chance of this impulse being over is higher. So that's, that's what I used in Confluence. And then I said, okay, if this small consolidation zone breaks to the downside, then this is probably going to continue. And I trail stopped it on the 5. So that was a 2-to-1 trade. In the meantime, though, this didn't go all too far. It actually, it was close. Close to hitting the -272, as you can see here, but just missed it by a few pips and bounced off the 135.50 level and has been in consolidation ever since, of course, during Asian session. Well, in any case, that was yesterday. Break of the triangle, hook back and continue. A small intraday trade. But today we are new day. What do we have now? We're still at a potential conflict of a daily uptrend and a 4-hour downtrend. Let me take this fib off. Let's take a look at the oscillator. Oh. Alrighty. Oscillator is pretty strong at the moment, but we do have a bit of hidden or bad divergence, in fact, between these bottoms. So I would say these tops pretty important for maybe the 4-hour trend here. If we break above it, we could see some upside continuation to retest these resistances. So I would say this resistance here, you can see that if we break these tops, we will be making higher highs on the 4-hour world. Of course, the daily is an uptrend already, so if we break above these tops, the 4-hour world will be an uptrend probably too. And then the next logical resistance, I think, are these tops in here, the 138.10 level that the currency could eventually go to. That level could be a resistance. Here's tops 2, and we could see again downside from there, right? So that's an important level. It's not easy for the currency to break through that, and if it did, it closed and reversed. So that would be an important level. Downside, as I said, it is a bit difficult with divergence now in play here. Maybe downside when it reaches this level, it could be a resistance spot. Let's see. Anything earlier than that is not easy. There's no clear consolidation. It's just moving up recently, as you can see. There's no clear trend line. In my opinion, maybe we have a 15-minute trend line like this. True, but very small. Together with this divergence, there is a good chance to retrace higher, right? But because we are in a pretty strong momentum here, depends. It could even be worth maybe buying, but I like to have more of a confirmed 4-hour trend supporting the trade. So that's why I'm not too interested as yet, unless maybe we get a bit of a hook back. So yeah, I would be more cautious with that. Let's take a look at the hourly. We've got a couple of hours bullish candles. Still not a big fan of it. The reason why, and I think that's, let's take a look at this hourly. We've got clearly lower lows and lower highs. This could easily be a lower high. So, you know, in that regard, buying right in front of that resistance, unless there's a very good reason, is not my favorite hobby. The only reason could be if there's really a higher time frame setup, then it would make sense, right? If we anticipate a big reversal and we expect a few hundred pips to the upside here, for example, then it might be worth it. But otherwise, and it could break this level here, could break. I'm not saying, but then there's only a few pips before we run into or bounce or bump into this top. And the reward to risk is then a bit doubtful in my opinion. The only reason I would change it is if we do break up like this and then get a hook back maybe and then bounce again. That would change it. Because then we broke this resistance already. Then we are making higher highs and higher lows. And then we're basically trading after a pullback and break. A substantial different dynamic is then happening because then we're already posting higher highs and higher lows on smaller time frames like the hour. And we have more confirmation of that upside. So I don't think there's any rush. There's this trend line here. It seems to be that we're breaking out of that. But still, as I said, I think it's a bit early, despite the divergence. Let me go a bit back. Here at the 50-minute world, you can see that once price reaches the green band, do you see that here? That was a place for support. Here too, there was support, but it went sideways. And then slowly but surely, the moving averages got aligned, and then that break was the better break. That's what I'm trying to hint at this situation. If we then move forward, you see the price is right at the green band right now. Now, of course, it could poke through a bit. Look at here. It hit the green band, retraced, and continued, and went through it a bit. But still, it didn't go all too far before we got a nasty consolidation. And then, as I said, when was it? Yesterday? No. What, Tuesday? I think we were talking about that we want a direction on the euro first, right? That was this one and this retrace, and we didn't get much follow-through, in fact. That was Tuesday. And yesterday, we were saying, let me think, where's the 8th? Here. We were looking at the euro. This is 2 hours ahead of my time, so we have our session at 9:45. 9:45 until 11:15. So during our session, we saw the euro basically break out of this and make a smaller hook back. And then it fell more. For me, that was the confirmation that, this was not a confirmation. I said the moving averages are all lined up, or how do you say it, are flat, and price is bouncing up and down around them. But when you get a directional move like this, all right, then everything is more clear, and we did get the follow-through. So something like that, I think, even though if this breaks up, we will see a break back to the moving averages and a bounce off the moving averages. And then everything is aligned just like it was aligned here, and just like it will be aligned, it was aligned here for that downside. That's what I meant. That's what I mean. I hope that's clear, that I explained it clear enough. Anyhow, back to the 4-hour. That's about it, I guess, that I want to share with the euro. Wei has a good comment here. If euro is lagging pound in terms of market cycles, would we see much of a break too? The pound is definitely potentially setting up for a good break to the upside. So that one more reason why the euro break to the upside is in the cards. Depending on the euro pound, of course, we will see which one will break more or will move more to the upside. Considering the fact that the euro has more resistance than the pound ahead of it, then or it's more in a downtrend than the pound. Pound is an uptrend, in fact. One would expect the pound to break up more, but let's take a look at the euro pound. You can see, looking at these moving averages, what do we see? Everything is red on the 1 hour. So a continuation of that is always possible in that case, right? There's no, let me check if there's any divergence. Maybe a bit between these bottoms. There was divergence between these bottoms, but you can see price went back to the long-term moving average, the green band, and thereby getting rid of that divergence, right? That's the target of the divergence, is the green band. So now we got it again. Maybe we can again go back to the green band, but let me take a look at the 4 hour 4 hours still trending down here on the oscillator. All right. Let me take a look here. We have a support level which was more or less broken. Not all too much though. No candle close above it, below it, and it's only a 12 pip break. What do we know about 12 pips, or 15 to be exact? Any break of a top or bottom by 15 pips, less than 15 pips, is actually not a full break as yet. I think it was 15. According to the Handbook of Technical Analysis, anything more than 15 pips is a full-fledged break. And that rule, of course, is there because do you really consider a 1 pip break of a top, would you consider that double top, or is it a higher high? According to the Handbook of Technical Analysis, it's a double top. To be honest, I would have to check if the technical analysis book mentions anything of regarding a close. I don't know, but I don't think so. But I could be wrong. I think it's the 15 pip. The close, the candle close, is something I look for indeed, probably. But I'm not 100% sure. So that's why 15 is important. So we didn't really break this level because of that. But of course, the next break, the next push through probably will, if we get that. But yeah, this is without doubt trending the oscillator. So pound looks stronger, and the hourly could maybe, the only thing that could happen is that the hourly could keep on correcting a bit more like this to make a bear flag, and probably will get one more break, I would say. But I'm not an expert in the euro pound. As you know, I truly find it quite annoying currency pair. So one of my goals this year, and somehow I always find it a challenge to trade it, because maybe I want to trade it because I want to somehow get a good trade on it. And my goal for 2014 is not to trade the euro pound. I'll be avoiding it. If I don't trade the euro pound the entire year, I've reached my goal. So Wei is saying 15 pips below the turn is something most traders would put their stop losses. Yes, true. Good point, Wei. Many people use only a few pips below a top or bottom. Some use 12 or 7. So 15 is a clear break indeed. Not many, yeah, there could be still some stop losses left, but not many indeed. So back to the pound, dollar. I was even thinking about trading this to the upside, but eventually didn't do it. Did anyone trade this pound dollar to by any chance? There was this triangle here, plus this top, of course, in play. And the funny thing is the ADP numbers were positive, and we saw it fall, but then we saw it close in reverse almost and skyrocket up again after ADP. So that was a pretty bullish move. In the meantime, we've had a small consolidation and a break to the upside. But as far as I'm concerned, it seems that the 38.2 could be a resistance spot. Let's see if that's so. These fibs are still something that I would be concerned of. But despite that, this is an uptrend though. I am not questioning that. And although the 38.2 could be a stalling spot, it could just be maybe a small stalling spot for more upside, right? Something like this, and we can continue up. As you can see on my drawings here, obviously, of course, these ups, even if it is an uptrend, we'll have ups and downs, so it's good to keep that in mind. But the 4 hour went back to the green band, and we've broken above this 4 hour fractal, 4 hour resistance, which in my opinion, considering the oscillator has gone back to the zero line in this uptrend and to the green band, now has broken above the 4-hour fractal. From a 4-hour perspective, despite the potential for the lower time frames to make maybe some correction, despite that, if you look at the 4-hour chart simply, then this looks like a bullish breakout to me. Maybe if we reach the 886 fib eventually, who knows, this could turn into a head and shoulders, but that's still far away from now. There's this resistance line we should be aware of as well. Oh, no, it's a bit... yeah, something like this. Something like that. In any case, you can see why this is a potential breakout when we have the oscillator back to the zero line in this uptrend and this green band as support and this trend line as well. And everything is lined up here. You can see prices above the moving averages. Let me show you this. You can see everything is green here. This was a small breakout trade, but sure looks like we were having another breakout. So any dip here could find the support to continue. Now, how much the market will move prior to those pound interest rates, I don't think that the interest rate will change, but it could be still, of course, a bit slower due to that. But a good way to keep an eye on the trend is just using these green and black bands to get an idea of the trend of the day, because most of the time, if you use the 50-minute chart and use the green and black bands, then it does give a good indication of the trend of the day. For example, here we didn't have much trend, right? This was no trend. This was chop price. Every time price went away from the moving averages, went back to the moving averages. That's why I was doing this. But eventually, the moving averages were aligned here, and the ADP dip was actually retracement, and then price bounced off the moving averages, and again. So let's see. How about the dollar yen? Dollar yen in a 50-minute triangle, right? Very clear triangle. That's an easy spot after a good run up. And that was a good pullback and continued trade here after this break. So that already discussed yesterday, but let me put it on the chart. Right, we had the break, pullback, continue, and now again a triangle, basically. So maybe the dollar yen will move today. This would be with the trend breakout. The target, in my opinion, maybe the 786, because we did just miss it by a few pips, but maybe it was already taken out. If it is, then the 886 would be the next resistance. So there could be this breakout trade up to the 886 fib. Right? So that's what could happen. This breakout trade right in here. Downside, if the price were to break to the downside below this fractal, then I wouldn't be interested personally. There could be a bigger retracement on the dollar yen, maybe to 103.70 or 103.20, and then we should see bounces up. But because of this basically grand uptrend on the monthly, weekly, daily chart, 4-hour chart, basically all these time frames are pointed up, I would not trade it to the downside. Wouldn't even touch it with a 10-yard pull. I'll be only looking for upside. It's way too strong. Look at this 4-hour chart. Take a look at the moving averages here. Forex trading becomes, I think, easier if one can recognize, well, recognize is easy, but capitalize maybe on these upswings. Right? Very nice. It's it's almost art in my opinion. Look at these beautiful price above these green moving averages. Beautiful. Maybe that's exaggerated, but it looks like a good uptrend to me. Also, all these resistances broke. So anything, and you can see here from the daily perspective, look at also these green moving averages. Yeah? Right, really, this was a triangle where we made move back to the long-term moving averages, as you can see. Classical, right? Break, consolidation, continue. So back to the 4-hour chart. So basically anything above, I don't know, even above these support levels, everything here is bullish. But of course I'm realistic enough to know that even though I'm bullish, it doesn't have to be bullish right now or forever upon the break. It could make a break and then hit the 886 and make a retracement, right? So that's part of having the good balanced expectations of a trend. The parameter settings, the ones I use is this. I'll write that down. Alrighty. So that's the yen. Now the others were a bit maybe a bit difficult in my opinion because the CAD had moved a lot. I didn't see it move that much more. The euro yen, euro odd, the pound odd, pound yen, they were an uptrend but made pretty sturdy retracements. So those were not that easy. But I think, let's take a look at the pound odd. Pound odd did eventually continue up, in fact. As you can see, we had trend lines yesterday on the chart, I think. It was trend line trading, right? And I didn't trust this breakout too much, but we did get a hook back and continue eventually. So, oh well. But that still played out pretty well, in fact. In any case, let's see. Back to the 4-hour chart, maybe. You can see that 4-hour, although it was a strong downside, just brought us back to the moving averages. In fact, a bigger retracement. This was all very strong. This was maybe just a bigger retracement. And after we broke this 4-hour resistance, we've been trading up, in fact. Now we're approaching, eventually we'll approach these tops again, of course, so we could see a bit of a stall with this uptrend when we get there. Back to the hourly. You can see we had a consolidation here, either a break above it or wait for the first smaller consolidation after above that zone and wait for the continuation. Both are really options, as we know. Break, pullback, continue principle could apply for this zone as well. But that happened during my night, first of all. But just not that I took it, I'm just showing how one could approach a consolidation zone like that green box in the middle. already. Let's take a look at the daily. Daily is definitely very impulsive on this pound odd. Massive upside. Let's take a look maybe what the target could be. Could be all the way 193. That's the minus 618 target, which is quite impressive. Depends, of course, how you put the fib. In some cases, we already are at the minus 618, so it depends how the fib is placed. Last week was a bearish candle, though, so something to be careful of when we approach last week's high. Prior to that, we only had almost every week had upside, except 2 exceptions. Last week was one of the strongest bearish candles, so something to be aware of. But if we break, move up to the last week's high, would probably still, as you can see, do very well. Might want to be a bit careful of this level, though. Seems like that would be a resistance spot, potentially. Let's take a look at the oscillator. Four-hour downside oscillator is very strong. This was a very strong down retracement, in fact. Look at this power, big zigzag. This upside has been pretty meek so far on the hourly. Let's take a look at the 4-hour. 4-hour, there could be some hidden divergence between these bottoms. In fact, that would be bullish. And we did have divergence between these tops here. But we did reach also the long-term moving average. So let's see if I can summarize it. Probably the best I would say is to wait for hook back, and there could be a decent chance of a bouncing spot from our upside to test these tops. That's how I think would make the most sense. I wouldn't want to go here because we are close relatively. If one goes along here, the risk basically towards reward isn't too much in balance, right? The red box being the potential risk here, something like that, and this being the potential reward. Going short here at right now wouldn't make too much sense in my opinion. It could be maybe a spot where the currency might retrace a bit, but this is a moving up. This is an uptrend, first of all, and this has an up momentum as well on the lower time frame. So that is against my rules. When those two are not aligned, or those two are both against you primarily, then I don't like to look for the opposite trade. So for me, the better trade seems to wait for a retrace and wait for a bounce to the upside. If one is looking for a reversal trade potentially, then maybe looking for a reversal higher around here makes more sense. Yes, the pound odd, definitely, this is a very impulsive move. But those things can be impulsive sometimes, right? So we didn't hit the minus 618 indeed, which leaves the possibility indeed for price to get there. I agree. I do agree. But despite that, it's too little, for me, too little confluence to trade it. Let me say it this way. Despite the impulse, despite the target open, there's not enough reasons for me to short right here. Let me say it this way. also, if it does correct, it would have to correct quite mildly and then break out of that consolidation before I would trade it, though. And then I would trade it up to the 786, for example, which could be a resistance spot. If we then get a very strong reaction to that level, again get a close in reverse like this, and then get a bear flag to the upside, then this is probably going to continue down to that target. Something like that could happen. Mild down, mild up, strong down, mild up, strong down, for example. The thing is, though, that this mild down might not happen now. It could be a bit higher. It could first push up and then have a mild down, or it could actually push up and then immediately fall from here, right? These are scenarios that can happen too. So maybe if it were to hit a higher resistance like the 78.6 or at least the 618, what's the difference here? It's about 15 pips difference here. Basically what I would like to see before I would attempt a reversal trade, let me organize my thoughts more clear for you, is that I would like to see an impulse here and then a soft correction up, basically. Once that is in play, then I would have more trust in trading a reversal trade towards that minus 618. That would be, for me, a more reliable signal and extra confidence. Until that happens, I'm afraid that this could still push up more than the stop loss would necessarily allow. So that's my reasoning. While Kiwi remains funky, broke up, hit the resistance line, our red line here, then moved down again. Not too interested in that one. Dollar Swiss C keeps pushing up, but is struggling with all these resistance lines we have here. It is in a channel like this, but obviously has problems with the resistance. So let's see if we can break through that. If it does, maybe there's a continuation up to these resistances. Yeah, it could be a bit of a diagonal, definitely. As well, I had it like that indeed, but this seemed to work as well. There's some divergence here as well. So in that regard, falling back to the green band could make sense. Let's see. Probably highly dependent on what will happen with the news, maybe the dollars we'll see here. But how about the Aussie? Aussie made a sturdy fall yesterday. We talked about the potential for the currency to break below this brown line. I'll make it a bit different. To break below this green line and fall to the next support level. So it's moving there. It hasn't reached the target quite yet, but it did break, pull back, and continue. So maybe one more push will bring it there. From the 4-hourly perspective, this brown line is a bottom line that's very important, just like the support for the Aussie and a downside continuation. The daily actually has an oscillator that's almost back to the zero line, which means that this downward move is over and this was a retrace, and this could then be ready to continue. And as you can see, this upside was this retracement was quite long. Price went back to the green band and moved away from it, then moved back to the green band and made a bit of a chop here. Here too, recently, look, this is where price was bouncing up and down around those moving averages. But there seems to be a bit more direction as we speak. Obviously, though, there's still a strong support level that has to be reckoned with. Alrighty. The 1 hour chart for the pound yen. Looking, we had a triangle, right here. Broke out of that triangle and we pulled back. We haven't gone anywhere really after that. We broke, pulled back, continued, but this is just a big consolidate or relatively sizable consolidation. If we put a fib on that breakout, let's take a look. Went to the 618, having trouble with that minus 272. If we break above there, we should go up to the minus 618. Well, the 4 hour, let's take a look at the 4 hour oscillator. You can see that the oscillator was definitely trending up very strongly. Oscillator was above the zero line, and as this was an uptrend, we've had a few dips back to the zero line, right? Here, and here, and recently. And when the price is back to the zero line, that means that that particular swing high, swing low is over, right? So what that means is that from this point to this point, that particular movement belongs to itself. That is one swing high, swing low. Right? And of course, within that swing high, swing low, you've had many ups and downs, right? Many ups and downs. So if we would zoom in to a 1 hour chart, we would have multiple swing high, swing lows on that 1 hour chart within this 4 hour swing high, swing low. So that's useful for the oscillator. Of course, the thing is when the oscillator goes back to the zero line in a strong trend, it actually shows that it's a good retracement, right? And it shows that it's a discounted, maybe a discount to get in the trend again when the oscillator goes back to the zero line. It also shows where you can put the fib. If this is one swing high, swing low, you can put the fib on this particular move, right? Also, of course, if it breaks back above the zero line, where it does here, or it turns green, then we know that the currency could be back in the uptrend. Right? Just as it is here. I forgot your question, Björn. The best indicator to spot divergence is, well, yeah, I use the oscillator, but many people use MACD or RSI or CCI. The oscillator is, yeah, roughly the same as MACD. I just like this one more, but I would say it's roughly the same. It's also good for wave counting. Elliott wave. Why is that? Because if this is one swing high, swing low, that means that this leg belongs to each other. That means that from a wave perspective, this is either a certain wave count. It could be a wave 3, for example. Then we know that this belongs to each other, so this could be a wave 4. And we know that this belongs to each other, so we label this wave 5. And by labeling all these corrections and impulses, basically all that wave counting is, although it is complex and it seems complex, but all that it is at its heart is saying this swing high, swing low is impulsive. This swing high, swing low is corrective. This one is impulsive and this is corrective. So if we piece them all together and say this is 1, 2, 3, this is 4, then the next one should be wave 5. That's all basically. It's just piecing together all those impulses and corrections and saying, okay, this is that, this is probably that, this is probably this. So most likely the next one is this. This is impulse, this is correction, this is impulse, this is correction, and the next one is probably impulse. All that it does is playing around with these impulses and corrections and trying to glue them together and piece them together, and then you got an idea what the future might be. So the awesome oscillator is good for that because it gives an idea what the swing high, swing low is and what the direction is. What is the impulse? What is the correction? Usually speaking, the oscillator wave 1 is less strong than wave 3, and wave 5 is less strong than wave 3. Why? Because then you get the divergence between these tops. So the awesome oscillator is good for direction and trend. It's good for momentum and to have an idea how strong price has moved in comparison to the oscillator, because if the oscillator is not strong, then there's some weakness probably. So it's good for divergence, it's good for trend, direction, momentum, and wave count, and to have an idea when the retracement is finished. So in my opinion, very, very useful, definitely. Let's add a CCI here. Let's see. You can see that here the CCI was strong, made a retrace, and that was actually a good dip. Right? Same here. Continued with the CCI, made a dip. This was a good dip. Right? Here too. And here. And here. So if you use a CCI within a trend like that, it could give you an idea. I wouldn't necessarily use it for finding tops, okay? Because if it's a strong trend, look, the CCI was topping out here at the first magenta line. Let me make that different. Let me make this blue. No, let me make it green. Okay, no, that's too light. Green here. You can see when the CCI was topping out, it was really only about halfway. So that's something you want to be careful of. The CCI is, I'm using the CCI 14 like Tarantula. If the CCI is topping in a trend, it's actually an indication of acceleration sometimes. So that's something one could use for establishing dips within this trend. Now I have one particular strategy that we've talked about before on the oscillator that looks for movements, first of all, to be very strong, then movements back to the zero line, and then the first break of a fractal. So let me give you an example. We had a very strong oscillator reading here. There's no doubt about that. This has gone back to the zero line, which means the setup has qualified. Okay? So those are the two main qualifications. Then the entry is actually the first 4-hour fractal break. So after that, so what that would mean is right here, this resistance. This red line here, let me make this, or let me make this this one the green. Good. So the entry would be there upon the 4-hour fractal break. The stop loss on the opposite side. Unfortunately, in this case, it's a tremendous stop loss, but that would be the idea. The entry here, the risk below the last 4-hour fractal, in fact, and there's an 80% chance of reaching a 1-to-1. So let's calculate that. There it's a 1-to-1. There's a 60% chance of reaching a 2-to-1. That's here. And even a small chance for 3-to-1. So you can see, indeed, the first target we hit almost to the pip here. We did have a struggle, though, of course. We did have a bit of a, so it took a long time to develop. We got a pretty big, sizable correction here. Didn't take out the stop loss, though, and then moved up to hit the 1-to-1. Then consolidated, went up to hit the 2-to-1, R2R, and now consolidating again, and now maybe able to push up for 3-to-1. Let's see if that's possible. It has already moved up substantially, though. But that would be the idea. That was that trade right here. But if the dollar yen continues, I don't see necessarily any reason for the pound yen not to continue either. So probably that 3-to-1 is possible as well. Pound dollar is making a bit of a bigger dip, and euro is going up. So the euro pound is actually, interesting enough, flying up. Strange. I did say that there's a chance of a correction like this, but I expected definitely a weaker correction. I expected a more milder bear flag, as I said. I didn't expect a bigger upside like this so far, but we are back at the green band, so you know it could still stop. But the euro dollar is finding some traction to the upside. Any particular currency you might want to take a look at together? Let me know. Maybe what is your favorite that you want to take a look at? I think, to me, probably today the dollar yen looks good. Maybe some trade on the majors, probably. I would think. I don't see much at the moment with the crosses, maybe. besides, I don't know, they are quite choppy as well. Here you can see an example of the euro-yen. Here, this dip, a break of the first 4-hour fractal. Here too. Aussie, yeah, good idea. We can take a look. Aussie, we had this trend line. We said maybe if it breaks that trend line, it could make the fall to the next support, and it seems to be doing that. Got a break, pullback, continue, but obviously we're also pretty close to the support. So at the moment, I would really like to see a break of the bigger bottom and then a bear flag, and then I would like to trade the continuation. So break, bear flag, and then I would like to trade that continuation. That would be the best, in my opinion. So there could be still a small fall, and then I would say we would see some retrace, and then let's see if we get the continuation or not. But it's a bit difficult spot, and the reason has to do with the fact that we couldn't break this bottom already twice, and now we're approaching a third time. So this is definitely still a downtrend, but the thing is that the consolidation is pretty decently big here. So need to wait for if this is a bear flag, it will have to prove itself by breaking first. I guess that's really it, because otherwise, other than that, if we don't break, there's of course the potential to bounce off this support, but then it would really have to break above 90 for me, at least. 90 is a resistance spot, this top here on the daily chart. So let me see. I got one question from Professional. I joined late, but I would like to hear comment about dollar index. Cool. Let's take a look at that. Indeed, good idea. There's the daily. So what do we have here? First a weekly maybe. Weekly, we got a triangle. Dollar definitely slowing down and making lower highs and higher lows, excuse me. Right, it has this contracting formation. The consolidation is getting smaller and tighter. And recently, even tighter, because these magenta lines are connecting tops and bottoms to make the consolidation even tighter. If we then zoom into the daily chart though, we can see that within the magentas, we've had some wacky ups and downs last year. Strong up, strong down, strong up, a V form, then down again. So that was pretty wacky. In the meantime, this was a pretty good impulse, and this seems to be now a hook back for more upside. But to really have a confirmation of that, we did break out of this black trend line, but we need to break above this resistance, and then we probably could have a decent breakout up to the top of the wedge again. So looks like it could be bullish. Of course, that bullishness does not necessarily have to appear on all currency pairs, as we know that the bullishness was more, the dollar bullishness was more visible against the Aussie recently. Even the euro of late had more downside than the pound, for example. So that would, of course, depend from pair to pair, but the breakout on the dollar index of the trend line here could be a first indication maybe that it has enough power to make the break to the upside. Well, let's see. No problem, Piotr. See you soon. Tonight we have a webinar, by the way, so I hope to see you there. We have Forex news trading. For others, of course, welcome as well. That's tonight at 5 p.m. GMT. I think Toronto will be talking the most about that because my practical knowledge of that is not high. It's not something I do myself. So, but I'm sure Toronto will have more to share. So, stay tuned for that if you want. Yeah, so that's what I'm expecting from the dollar index. Any questions, Vesna, maybe, or how do you see it? Do you see it the same? Lower time frame? Yeah, we can take a look. 4-hour chart, we can see the break to the upside since the new year, right? We had some bullishness. We had some bearishness end of last year. We had some bullishness beginning of this year. So the 4-hour chart showing this break, the break here, pull back and continue. Got some bearish price action as we speak, though. One-hour chart, I don't know, really not much to add. There could be some resistance line here. Let me change the template. Maybe we can look at the oscillator here. Could have been maybe a rising wedge, if you look at it like this. But yeah, possible. We broke out of it anyhow. Let me change the template. The 4-hour chart seems to finally have a direction. The price is above it. There was a lot of ups and downs though within this zone. Let me take a look at the daily. You see, that's the thing with such a choppy range right now. Those moving averages are, less valuable in a way because price is really bouncing up and down because of that big consolidation. From a weekly perspective, the price moving averages are still aligned to the upside. Look at this. Price was below the black band. Price then was above the black band. And eventually the black band crossed the green band. It's still above the green band. So maybe because of that, the bullishness is still a bit stronger. We got this support right in here as well, by the way. So maybe we are at, maybe this is a bounce, hook back and continue. The only thing is that from a daily perspective, price is at that long-term moving average. So as I said, that's why I had this level here. Like, I would like to see a break above there, because then it's more of a confirmation. So down to the 4-hour chart. Here though, we can see this uptrend already kicking in a bit. So if price hooks back to this level, it could bounce up from there. So now down to the 1-hour, and that level is actually the green band on the hourly. So if price maybe gets to the green band, we do have divergence between these and a rising wedge between these tops. So the green band would be the target. So maybe we can make a dip there and then up, which would mean dollar weakness and then some strength. So that could mean for the pound dollar, maybe a breakout to the upside, and the euro dollar maybe as well, and then we would maybe have some troubles when they get close to tops, maybe something like that. All right, that's great, Veshna. Great stuff. I'm very happy with that. How about this euro odd? Maybe we can take a look at. That seems to be breaking up to the upside too, in fact. After a deep, deep retracement, seems to be making a bit of a recovery. Right, this trend line maybe, it seems to be poking through it. And seems to be breaking above this top here, this one, which was a resistance spot, of course. Price is pushing through that, so struggling a bit here maybe, but it did recently even break this top, so this could be maybe pullback. I don't know. Let me take a look at the let's take a look at this one here. 15-minute chart. Lower time frames are definitely an uptrend because everything is green, price is above it. Last time we had that, it was good for a bit of a bounce here. Remember last time here, right in there, it did bounce up a bit. Then we got that big consolidation. Actually, yesterday we were looking at it here, and we had this consolidation. That broke to the downside, in fact. But then we found support, and then got the upside continuation with a lot of spikes up and down, though. And now we just broke this resistance. So could be a support level. But yeah. This is the 1-minute chart. Even the 1-minute chart, you can see how using these moving averages can be good, because you can see here breakout trade doing very well. Of course, you will have some choppiness logically. So I wouldn't recommend a 1 minute chart, but it's just more out of for the fun of it. Let's take a look at the oscillator first. I was just analyzing these moving averages. Sorry for that. Let's take a look at maybe the hourly first. Four-hour chart is, if you look at the oscillator, it has gone back to the zero line and has turned. It's green. It's moving back. Plus, it broke out of this 4-hour fractal as well. So, yeah, this could be making higher highs and higher lows now. So there could be some bullish upside on the zero odd. The first real level to be worried about maybe on the zero odd is this bottom right in here, in fact. These tops, of course, and then eventually these tops. So those would be the closest resistance that one would have to worry about, I would think. But it's still early in the game, though, this uptrend. Parity targets. Which currency? Parity target. Now it's at 153. You mean like parity in the sense of that this is like equilibrium line, you mean? Not in the sense of the round figure of 1.0. That way. Yeah, okay. Now I understand what you mean. Yes, if we would calculate the bottom here from 151.15, good point, to 153.10, 11, which is about 196 pips, if we add that indeed to this bottom, then we would be roughly at 153.90, and 153.90 is at 153.80, approximately this bottom. Yeah, that would be approximately, then this leg is equal to this leg indeed. Very true. Good point. That would also probably be the minus 272 target if we put this fib on, roughly speaking. That's a bit lower, but something like that. Still not 100% sure if this is the, if this is the best moment, but it is a low risk. But trading is always a question of accepting losses. So, but it has a potential. Maybe not the biggest potential because there is some divergence on the 5-minute chart. That's something that was worrying me. That's why I was trying to look at all these time frames to cover multiple angles. There is some, the only thing I'm a bit worried about is the triple divergence here. And We know that with that many divergence, the currency could go back to the green band and find support there. Let's take a look where that green band is on the higher time frames. So that would mean actually a dip back to these levels before we move up. So that might be worth waiting for. You can see that the moving averages are pointed up. So that too, day two, this black band, if price does move back there, they would provide probably that support indeed. Plus, we know that not only the black band is here on the 1 hour, but the green band of the 5. And probably, yeah, halfway on the 15. So I hope that makes sense. Basically what I was trying to do here, I hope that was clear. The method I was doing is using for multiple time frames, looking at where the moving averages are to see where the confluence is with those moving averages, basically. Well, at the top of the hour was just 2 minutes ago. Let's see. I don't think we had any news, but let me check. Trade balance of pound and 27, and then an hour from now we have actually a lot of euro news. Let me show you the webinars where you can get them. Go to admiralmarkets.com, click on education, click on webinars, and tonight, as you can see, we have Oscillator, Forex news. Then the next week we'll be back to the same schedule. And regarding our educational webinar, next week we'll have scalping the Forex market. So this week Forex news trading, next week scalping. And one more thing, if you are maybe new in here, take a look at Trading Camp as well. That could be interesting for you. And if you go on to analytics, you got all kind of things that could be interesting, fundamental, technical, wave analysis. That's what I do every morning. And you even have a trader's blog. So those are things that are pretty cool. Take a look if you want. And then I guess one more thing, any questions from your side maybe about anything that we discussed today? Any clarifications maybe you want to ask regarding moving averages, oscillator? That was the primary focus of today, so, or any currency pair. Otherwise, if not, then we'll wrap it up for today, and I'll see you hopefully tonight. But let me know if you have any questions. We can take a look at that specifically, of course. What are you expecting? Are you expecting a good NFP number? Do you have any expectation on that? It would be interesting, wouldn't it? Pretty curious. Oh wow, you're odd. Did get a bounce here despite the divergence. Oh well. What can you do? It was a retracement indeed, but maybe it will. Now it's a bit late, of course, unfortunately. But it could still have problems with this resistance line, though, as we can see. It's funny, though, of course, how waiting for retracements to retest fractals. You can see how useful that can be sometimes. Great stuff, Brian. I'm glad you enjoyed it. I hope others did too. I don't see any questions. Oh, great. Björn has one question. 6th of January, gold spiked down maybe 100 pips in 1 minute. Next minute, up to where it was. What is that? 6th of January. I don't know if there was anything specific that happened the 6th of January. Gold, though, is known for its lighter volume. I mean, I'm not saying it has a light volume. I'm sure there's plenty of people who trade it, but what I've read is that XAUSD gold has less volume and is therefore easier to, let's say, move price up and down. If you look at NFPs, you'll see regularly that gold moves prior to the NFP news announcement. And often it is moving in the direction where the market will break out to. So somehow there's money pushing it into a direction, and they're probably pretty sure that they're going to make money on that trade, I would think. Of course, this is a bit of speculation. But what I've read is that two facts or two things I've read is, one, gold is lighter traded in volume. Two, it moves prior to NFP, contrary to the others. So yeah, you have to make your own conclusions from those two things, but those are what I've read. So maybe it's easier for, to move that price certain distances up and down because of that. Wei is, by the way, saying it was blamed on high frequency trading, HFT, and he has a link there, by the way. So I'm trying to get the link. 1 second. I think wasn't part of the movement also, there was one market where the price really made a big spike, and part of that spike was canceled. Does anyone remember what market that was? It wasn't too long ago. Was this the gold on the 6th of January, or was it the other market? Does anyone know? I mean that the price had moved, but then the regulatory agency, so it must have been some market, I don't think it was Forex then, decided to cancel that as past history. And the price movement above a certain level was canceled. Does anyone remember that, which market it was? I forgot. So this link of Wei shows the entire $30 drop in the price of gold futures that occurred in just under 1/10 of a second. When you separate the groups of trades by a jump in the exchange sequence number, a technique to determine the size of a large order, we discovered there were 9 groups where the sum of trades was exactly 338 contracts. Each group is composed of widely different numbers of trades. Yet the sum of the sizes of each group totals exactly 338. We show these 9 groups in the chart below. What's more, there are other trades occurring between these groups of 338. This was not the result of a fat finger, but rather the work of a high-frequency trading algorithm that would pause and probably test the market before continuing. A fat finger would not have such distinguishing features. Very interesting. So it has a drop. Each of those were 338 here. And then it had a rally, and the rally in the middle of the drop indicates the decline wasn't from one large market order. Very interesting. So yeah, you want to be careful sometimes with gold and its movements. Great stuff, Wei and Björn. Thanks for that. Well, I guess that wraps up today. Thanks for being here and joining me with this analysis and looking at the charts. Glad you were here. We'll be back tonight and then next week, of course, again. And hope to see you later on, or otherwise wish you a great weekend. Cheers, everyone.